Welcome to Private Equity Solutions, and my name is Ferdinand Ruano, and basically what we want to do today is to explain you and give you an overview of what Private Equity Solutions it's all about and how it was, what is the origin of the concept. I've been in the financial service industry for 36 years, acting as a broker and then as a money manager in different corporations. Especially when I developed Ruano Investment Planning Group, that was my original investment management company. 2008 was the beginning of the idea, when the big crisis in the United States, it was all over the place. Real estate, all different asset classes were really going through a tremendous crisis. 2010, most of our clients that they have been with us for more than 15 years, they asked me, Ferdinand, is there any way that you can design an investment model that can be consistent in returns in any cycle, up or down, and in that way we don't go through the periods of trough cycles and really recessionary cycles. Always there is an opportunity. When there is a crisis, there is an opportunity, and that's how we develop private equity solutions through four different models. The first one is called the private placement, which is an investment that allows an investor to participate in the concept of buying distressed assets in real estate, rehab the real estate, income property in the real estate, develop the real estate, but you don't have to do anything. It's a passive way to participate in a very, very high margin business. And in that way, we share with you 8% interest, and we give you 10% additional compensation at the end of 5 years. Most of the fund basically guarantees the principal. The principal of the investment usually is at 5 years, but you can renew the contract every 2 years. That's the origin, that's the fund. That's the basis of the investment. We register, it's a register with different states, and usually with the Security Exchange Commission through the private placement rule 506. The second one is a separate account. A separate account basically allows you to participate in the track record of the fund. The fund has been consistent earning over double-digit returns for the last 5 years. We share with you in the fund the 8%, as I mentioned. But now, there's some participants that say, you know what, I would like if you can do the same concept but tailored to my specific needs, tailored to my investment objective, using the knowledge and the experience and the track record that you have. And that's how we came up with a separate account. We share the profits with you. We develop, we rehab, we market the property, we do everything. But you are the owner of the property. You control the deed of the property. We select it for you. But all the track record and the management is done through us, and at the end of the period of the investment, we share with you the profits, and at the same time, we give you a higher potential for growth. There are some areas of the separate account that I like. One is that has an income and growth, that basically you can have a property for a couple of years and you get rental income, and then you get growth in the property, and then you sell it and get a gain. And other ones, they like just flipping. Just basically, I would like to buy the property, we buy a very heavy discount, we resell it in 6, 8, 10, 12 months, and we share the profits. But we do everything for you. You take care of the contracts, you don't have to worry about it. It's made easy, but you control the asset. So, first one is PPM, private placement. It's kind of a fund where you participate. It's a passive way to participate in investment. The second one, you are the owner. You are the owner of the property. We manage it. We basically create the marketing, the rehab. We deal with all the headaches that real estate development and real estate investment involves. The third one is called joint venture. Joint venture, you are part of the equation. You are not the complete owner. We share the ownership of the property. We develop the property. but we give you a specific return on investment, predetermined based on the contribution that you made. If you invest 100,000, you will get a specific predetermined rate of return. If you get 250,000, you get a predetermined rate of return. 500,000 by levels of contribution. In this case, 100,000 to less than 250 give you 8% return, predetermined. If you invest more than 250,000, you make 10%. If you contribute 500,000 and above, you will make 12% in 12 months. We own the property with you, but we develop. It's a joint venture. You put the capital, we give you a specific return, we manage it for you. At the end of the equation, we give you an additional sharing of the profit. That's why it's a joint venture. We provide the expertise, you provide the capital, you are rewarded with a predetermined level of return, and we share in the success of the investment. So a joint venture is kind of a combination of a separate account and a private placement, in a nutshell. Protecting your interest first, and we take care of you based on our expertise. The fourth level is called PCMO, Private Collateralized Mortgage Obligation Note. It's a big word, but basically the concept is very easy. Most of the baby boomers today, they're having problems with income. They're living longer, they're spending more, they're having a great life, they have been working hard, but the last 10 years, the stock market has been miserable for them. We have 2 collapses in the stock market. 2007, we lost almost 40%. And then 2001 with the bubble of the internet bubble, then they lost another 24%. And then you got the real estate bubble, and they got another 20% down. So it was a very tough decade. So now we got returns, very low interest rates. The Federal Reserve, in order to get us out of a depression, lower interest rates in a very minimal level. And usually in that minimum level caused that interest rates in fixed income investments that most of these baby boomers were depending on for current income needs, they have depleted. They have just come to a very low single-digit returns. For example, 10-year Treasury notes give you around 2.25% for 10 years. If you buy a mortgage today, you will have to pay at least over 4.5–5%. What we do in this program, it's a unique program because we create the mortgage for you, collateralized by real estate, and allow you to provide you with a higher income that basically you will get from a fixed income or from a certificate of deposit or from a savings account. The average return on a mortgage has been between 5.25% and 6%. That's not a bad yield if you compare the yields today. And you know what? Instead of Wall Street managing and making things like subprime rates, and you don't know what that pool of mortgages you have, you know the property, a specific property that you are getting the mortgage out. So you're getting control of the asset without owning the asset, but receiving income and cash flow without the expense of rental income of real estate. So it's a hybrid, it's a combination of concepts to provide income, some growth, but very conservative way. My idea basically when I made the company in 2010 was to create a solution-driven company that really maximize wealth and make an impact financially in every aspect to any contact that private equity solutions has with suppliers, participants, customers, and our employees. So I welcome you for Private Equity Solutions. Be part of our world.